Good afternoon. You're watching Be the Boss of Your Money, my live stream all about personal finance, investing, economic news, stock market, bond market, interest rates, mortgage rates, you name it. We talk about it here, all to make you better with your money. And even if you are experienced and on your path, I should say, to success, there are still things you need to know. There are still things we need to cover. There is new things in the market. There are always new things in the market. And you need to understand what's going on. When you have an understanding about what's swirling around you in terms of all the news coming out, how it relates to the markets, how it relates to your personal investments, and how it relates to your personal financial goals, how you define them, when you put that all together, you start to create an investment plan and financial plan that's just for you. And when you do that, that's where the magic happens. That's when you stick to the plan. Sticking to the plan over the long term is the best way to make a plan work, right? That's why this is so important. And that's why the work we do in this show is really important. And I'm not just saying that because it's my show. I'm saying that because it's all about you. Okay. That's what I'm saying. This is important to know. How many people make mistakes? Listen, there's more information at your fingertips today than ever before. Everything that you want to know about a stock, about its chart, about its earnings, about a company's earnings, about planning and investing, mortgage rates, mortgage calculators. It's all right there at your fingertips. I started in the business in 1990, folks. Graduated college in 89, started in the business in 90. All this information today is at your fingertips. But have people become better with their money with all this information? Have they become better investors? Have they stopped making the same old emotional investing mistakes? No. Have people gotten better with their personal finance? No. There's a record amount of Americans with not even $1,000 in the bank. They're literally, money's coming in, money's going out. And if they're lucky, for a lot of people, they have a credit card to get them through an off month. That's where so many people are. We are not better as a society with money, but that's what the show's about. It's about making you better with your money. I want you to be the boss of your money. I know it sounds hokey, be the boss of your money. It sounds hokey. Maybe I would have named it something else if I started the show today. I started it almost 4 years ago, and that was kind of the thing on social media, the boss, be the boss of this, money boss, girl boss, guy boss, big boss, whatever. So it's be the boss of your money. I don't feel like changing it. I've just invested too much time and effort into the name. But you know what I mean? I want you to be the boss of your money because I want you to take control of your money. You see money going out, you wonder where it went. Look around you. Look at what you spent on. I really want to emphasize this. A budget. Oh my God, when I say budget, people want to vomit. I don't like the word budget either. It's like diet. I hate diet. I hate being on restriction. But then I think in terms of a budget like this. It's about priorities. A budget is about buying things that bring you lasting joy, not about the things that give you a quick dopamine hit and then they disappear. I was just talking to a good friend of mine. I said, you ever go to somebody's house that have all these things that they bought them on TV commercials, web commercials, ads, and they're all over the house? They're just looking for this quick hit of dopamine. And the smart people, the people who are good with their money, are really investing in things that are bringing them lasting joy, whether it's memories from experiences, whether if it's photography or some other hobby that they enjoy. That's what a budget is about. A budget is prioritizing what you enjoy, not all the little nonsense things. Okay, having said that, let's just roll the quick intro. There's some breaking news right now, and you need to know this. I'm just going to put it on the screen right away before we run into the intro, okay? Treasury debt limit measures may run out by June 1st, Yellen says in a letter to McCarthy. We weren't expecting this to happen until July, which is soon enough. But today's May 1st, so we have a month until we start literally reneging on the promises of the U.S. Treasury, where the full faith and credit of the United States no longer means anything. Where, we say it's backed by the full faith and credit of the United States. We're running out of time, and it's going to happen a lot quicker than we expected. This bears so much watching because the timeline has been moved up now. Maybe some of the skeptics out there are like, well, they're just saying that to get everybody in the ball. I don't think Janet Yellen is doing that. I think that they're just finding out how close we are to default. So the people who get hurt, the people who are going to get hurt first, government workers, armed forces, your soldiers, because their pay gets cut first. And what do we do after that? We start cutting back on services, roads, parks. We just have to start cutting back on a lot of services. And a lot of the services we're going to cut back on don't even mean that much to the budget. But the big stuff like defense spending and entitlement spending, that'll get hit too. This is huge. So let's keep a watch on this. We're going to talk about this in the markets. Let's just roll the intro, and then we'll get into the market and some personal finance stuff. Here we go. All right, we're back. Maddie, I see you on the show, and I'm going to see you in person in hopefully about 25 minutes or so, 30 minutes. So I'll be there. I'll be out here soon. Don't you worry. I'm going to make this as quick as possible. Maddie's a friend of mine and an extraordinarily talented and experienced residential realtor on the North Shore of Long Island. Melville, Jericho, Brookville, Muttontown, Comac. You name it, she's done it. She is the go-to person. So whenever I have a question about real estate, I go to Maddie, and you should too. So she's with Compass. I just want to make sure. If I messed that up, I'm really sorry. You could write in the comments who you're with, and I'll post it though. Okay. But I know you for so long, so I don't really care what firm you're with. I just follow you. Okay. So here we go. If you have any questions while we're talking, whatever we're talking about, hit me up in the comments. If I miss you and you're watching this in the replay, again, hit me up with your questions in the comments. I will see the questions. I will answer you. If you want to schedule a one-on-one to talk about finding the right portfolio of investments and financial plan for you, that's what I'm here to help you do. It's well worth your time to speak with me for a 15-minute chat to see if we're a good fit and to see if I can help you get on your way accurately and as expeditiously as possible to your goal, which is most likely, I'm thinking, a successful retirement. What is a successful retirement? In its most basic form, not running out of money before you die. In its most complex form, allowing you to do a lot of the things, here we go again, not budgeting, but prioritizing, allow you to live a life that prioritizes the things that are most important to you. Not prioritizing everything and living life without limits, but you could have a pretty darn good time without limits in your enjoyment of the things you like to do. That, my friends, is what it's all about. Let's take a quick look, okay? So markets were off a touch today, but after last week's big week, this is nothing, okay? The Dow was down 46 points. That's 0.14%. NASDAQ down 0.11. S&P down 0.04. That's 0.04%. These moves are meaningless. After a big up week and a decent month last month for the stock market, this isn't really much of a deal. This is just the market pacing time. And why is it pacing time? Well, I'll tell you why. Because the Fed meets tomorrow and Wednesday, a 2-day meeting, the Federal Reserve, to decide what it's going to do with short-term interest rates. It is expected to raise rates 0.25% on Wednesday. That's the federal funds rate, the short-term lending rate that banks lend to each other, which is determined by the Federal Reserve. And when that rate goes up, it has a reverberating, what's the right word? A echo effect. It makes other rates go up as well. So therefore, we expect the Fed to raise rates, and to cool it after that, maybe not raise rates at all anymore. And if we see some inflation numbers coming out and starting to, they're kind of steady, but they've been going down as a trend since their peak a few months ago, almost a year ago, we should start to see, I think, the market go higher. Be prepared. Be prepared. The Dow is up. The Dow is only about 7.7% away from its all-time high. S&P is maybe 13%. By the way, you can't invest directly into an index, but you could invest in a security that tracks them. I messed that up. I see it every day. You can't invest directly into an index, but you could invest into a security that tracks or mimics an index. You could probably say it without me saying it. I can't believe I messed that up. I'm all over the place, and I'm really thirsty. It's hot in my office today. I also have a lot of lights on me right now. Excuse me. So anyway, my allergies killing me. So what we talking about? Yeah. So we could see the S&P hit a new high this year, and no one's talking about that. But as inflation comes down, the Fed pauses and then eases up on rates. And you see earnings have been coming down pretty good. Yeah, earnings are down a little bit, but they're coming in better than expected. But not a disaster, not the massive corporate bankruptcies that we've seen in past recessions. And the large companies, which are the ones that count, the ones that dominate the S&P 500, they're doing very well. Like Meta, which was up a lot last week. That's Facebook to you and me. They changed their name to Meta. You are seeing really big moves in these stocks to the upside. Apple's earnings come out Thursday, and it's all about iPhone sales. We actually expect to see iPads and Macs down in sales from a year ago, but we actually expect to see iPhone sales hold up. So that's what it's all about. It's all about iPhone sales. So these are the things we're looking at. Gold is $1,990, a little under $2,000 the ounce. Gold has been having trouble holding $2,000. And I think there's a reason for that. With this whole inflation thing, gold has been trading roughly about 1,800 to the very low 2,000s. It's never really had a major breakout. And now that inflation is on the wane, no offense to anybody named Wayne, we are actually, I'm thinking maybe there's not that much impetus to own gold I'm talking based as an inflation hedge, okay? It's not a buy or sell recommendation on gold. I don't want to give buy and sell recommendations on this show because I really need to know who I'm talking to, okay? Oil down $1.75 and change. What happened to that whole thing with OPEC? They're going to cut back like 1.1 million barrels a day. Oil's been shot up and then it's been coming down right after that. Okay, 10-year yield, 3.5%. Yields were up a little bit across the board, nothing crazy. And the VIX still well below 20 at 16. So the market's been taken in stride and pretty calm about things. Some stocks in the news. Disney has been around 94 to 96. It's now 102. So Disney is moving up over 100. It seems to have, it's sticking there right now. We'll see what happens. But it's been in the news a lot political wise. But I think Disney will do fine. That's what I think. Again, I might buy or sell recommendation. Oh, I could just see my compliance peeps. I could see you calling me up saying, what are you saying about Disney? I'm just observing that the stock has been moving up in light of being in the middle of a political fight with Governor DeSantis. Meta Platforms, 242. All right, so it had a huge week last week. The fact it was down 28 cents. It was, first of all, it was up almost $3 today in the regular trading session. So it continued to move up, hit a new high. Good for them. First Republic. I don't even know if the stock traded. Well, look, JP Morgan was up $3 today. All right. First Republic, I didn't even close. I didn't even trade today. So what's going on with that? JP Morgan is going to buy what's left of First Republic. The stock, I don't think it didn't even trade today. There was an indication for $2.16 before the market opened today, but that hasn't budged since then. Basically, you're getting wiped out. Like if you own the stock, just be prepared to see it just go down to a couple of pennies because the shareholders are not part of the rescue package. It's more about saving the Bank First Republic, protecting its assets, its depositors, and most of all, protecting the banking system. And hopefully, this is the last domino to fall in the regional banking sector debacle. We spoke about this extensively. If you recall, we spoke about what really happened at Silicon Valley Bank some time ago. I did a whole expose on that. It turned out to be one of my most watched live streams. You can go back to my YouTube channel, Client for Strategy, and check it out there. And while you're checking things out, you can follow me in all these great places over here, okay? Instagram, YouTube, LinkedIn, Facebook, Twitter, whatever suits you. Connect with me. And again, if you want to talk about if you want to have a one-on-one with me and talk about what's right for you, what you should be doing with your money now to make sure you are on your way to meeting your financial goals and to make sure you're not leaving any opportunities on the table, that's when you call me, because I explore the opportunities. I don't just take assets and manage them and send you on your merry way. I'm really looking for financial opportunities to help you meet your financial goals, uncover things that nobody else has seen. So call me up for that. Anyway, that's the show today. So tomorrow, Wednesday, Fed meeting, Federal Reserve meeting. We'll know about 2:15 p.m. what the Fed's going to do. We expect a quarter-point rate hike, and then they cool it on rate hikes. And then Apple earnings come out after the close on Thursday. Those are really the only two things that count this week. Everything else is just, whatever. Well, I should say that. Friday, we get labor figures, employment figures. That's a big one, too. Wow, so much big news. No wonder stocks barely budged today. Nobody would want to do anything right now. You don't know if you should sell. You don't know if you should buy. But if you have the right investment plan, everything is already set in motion. It's a really good feeling. Have a great day, everybody. I'm on my way to meet my friend Maddie, and she's going to show me some condos. Talk to you soon.